Hello.
Hi.
Nice to meet you.
Adam.
How are you doing, sir?
Good.
Hi, my name is Alexa. You're available for the meeting. I will, each team has 20 minutes to present our case to the judge. I will show papers for the 10 minutes mark, the 5 minutes remaining mark, the 2 minutes remaining mark, and the 30 final seconds of the presentation. The last 10 seconds I will show with my hands. The team that has not finished by the hand of the assistant will be subject in order to start the question period. I would like to take the time to remind the panel of judge that the question period is 5 minutes long and this is mandatory to ask at least one question. I will now let the judge introduce themselves and you may begin when ready. Good luck.
Hi, my name is Michael Carruth. I'm a financial consultant with MD Management.
I'm Marc-Andre Philippe. I'm a trader at MD Management.
My name is Eric Duchesne. I'm also a securities trader at MD Management.
Donc, bonjour chers membres. Aujourd'hui, nous sommes ici pour la compagnie Max Profit Inc. Donc, dans le fond, je me présente. Je m'appelle Marc-Claude Monette. Voici Lee Wei-Zhang et Adam Black. Nous sommes donc des analystes de la compagnie Max Profit et nous allons vous présenter une analyse de marché dans le fond des bourses et analyser aussi d'autres aspects financiers afin de vous aider à mieux comprendre. Donc, pour ordre du jour, dans le fond, nous allons vous présenter le mandat. Par la suite, l'hypothèse de l'efficience de marché, comme vous nous avez demandé de nous expliquer dans le cas. Par la suite, le scandale Volkswagen, l'effet Donald Trump et par la suite des recommandations. Donc, nous allons vous donner plusieurs options afin que vous puissiez investir votre argent et nous allons finir avec une conclusion. Donc, pour ce qui est du mandat, en fond, vous nous avez demandé d'analyser l'évolution des marchés, plus précisément le scandale Volkswagen et l'effet Donald Trump. Donc, nous allons regarder en fonction des dates, donc de septembre à décembre. Et par la suite, nous allons vous expliquer les concepts et les limites de l'hypothèse de marché afin de vous aider à mieux comprendre les aspects financiers, même si vous avez fait des recherches déjà d'avance. Par la suite, ça va être vraiment une recommandation à l'aide d'un plan d'entrée de marché avec des stratégies de couverture que Adam va nous présenter plus tard. Donc, pour ce qui est de la situation actuelle, donc en fond, vous avez remporté le Grand Prix de loterie qui était de 60 millions de dollars. Bravo, en janvier 2014. Donc, pour ce qui suit, c'est vraiment, vous avez remboursé vos dettes et fait des achats de biens pour 10 millions de dollars, ce qui nous reste avec un 50 millions de dollars qui est dans le fond mis dans des dépôts à terme qui échuent le 28 février 2017. Donc, c'est pourquoi vous voulez aller sur les marchés des stocks afin de l'investir et de faire de l'argent avec celui-ci. Donc, je passe la parole à Lee Wei qui va vous parler du Market Efficiency Hypothesis.
Now I want to explain the market efficiency hypothesis to Mr. Grid so he could really understand the stock market. So the market efficiency hypothesis states that an investor couldn't beat the market. So that means investors couldn't really fund a undervalued stock at the market, or the investors couldn't sell their market by higher price because all these stocks are traded by their fair value. So if an investor wants to make a higher return, how could he do? The only way he could do is he invest in the more risk investment so he could get higher return. However, for this theory, a lot of investors don't believe this because actually we always say that some investors beat the market. They become rich because they invest in the stock market. Also, there are like two really obvious limits of this theory. First, the stocks takes time to reflect all the information. For example, if an investor could get the investment information really quick, and then he buy the stock or sell the stock before the stock price change, so he could get profit, right? Also, the second is the price can always influenced by human errors or emotional decision making. by doing that, by talking about this, I want to introduce 4 types of investors so you could understand their behaviors and how their behaviors affect the market price of stocks. There are 4 types of investors. They are bulls, bears, chickens, and pigs. So bulls are investors who believe the market price of the stocks will go really high. So they invest a lot of money now, and they believe they will have a really high return after that. And bears are thinking the market is not going so well these days, so they will hold their money until they feel the market price will going up, or they will do short selling these days. So when the market price of stocks continue going low, they could get profit. Also, chickens are the type of investors. They are so afraid of risks, so that they don't really want to invest money to risky investment. They don't usually put their money to options, or they don't really invest in really risky investments. And there are the last type of investors is called pigs, and they are really risky investors because they are greedy, they are impatient, they don't want to study about the stock market, they just want to have high risk within a really short time. And for these investors, they usually lost all their investors because they don't really understand the market. And for the knowledgeable investors, they usually use fundamental or technical analysis to predict the market trends because they know sometimes the stock's price is not the fair price. So they could do the analysis to get the higher return by buying the undervalued stock. And also, I want to mention the stock price are influenced actually by the demand and supply in the market. And what the demand and supply actually is caused by the investors' behavior. So I'm so sure you are familiar with sometimes if the company changes the CEO or changes the executive teams, their stock price will change. Also sometimes the company publish their annual report and the investors believe the company will earn a lot of money in the future. Their market price of the stock will go really high. So we could know the market price is affected by the investors' decisions. And there are 3 types of 3 types of the shortcomings of the investors. The first is they are too positive or too negative to the market. So they either put a lot of money in the market or they don't invest. The second type is they are too afraid to lose, so they don't invest at all. And the third type is they are impatient, that pigs investors. So they are risky investors. They just follow what others people do. For example, during the .com bubble, all the internet companies' stock price goes really high, but actually those companies didn't really make profit. But people just follow what other people do. But that is not a good choice. And now I'm going to pass to my colleague.
Donc, pour ce qui est de l'analyse du Volkswagen, premièrement, on va expliquer un peu c'était quoi vraiment le scandale de Volkswagen. C'est vraiment un mécanisme interne qui était installé dans les automobiles, en fond, de limitation de gaz polluants qui permettait aux véhicules de passer des tests sans encombre, en fond, des tests écologiques. Donc, ce qui faisait qu'il y avait un certificat de voiture écologique, mais dans le fond, l'émission de gaz était plus haute que ce qu'elle était censée. Donc, plus de 11 millions de véhicules ont été concernés. Ça concernait tous les moteurs diesel de type EA 189. Donc, pour ce qui est de certaines dates clés, dans le fond, on avait le 15 septembre 2015, qui était la situation est devenue publique dans les médias. Donc, ça avait fait vraiment un gros crash pour les actions de Volkswagen. Et c'est le 18 septembre 2015 que USEPA, dans le fond, a indiqué qu'il y avait une violation à l'acte. Et ensuite, le PDG donne sa démission. Donc, comme on peut voir ici sur le graphique, dans le fond, le 30 décembre 2013, l'action était à 204,85 $. Donc, on peut voir au milieu, il y a eu des petites variations. On a pris le 30 décembre 2013 à la place du 1er janvier 2014, comme qui était marqué dans le cas, étant donné que les marchés sont fermés le 31 décembre et le 1er janvier. Donc, on a décidé de prendre le 30 décembre 2013. Donc, pour ce qui est une autre date aussi importante, c'est avril 2015. Donc, la Chine vraiment représente près de 20% des revenus de Volkswagen. Donc, les actions chinoises étaient vraiment en hausse en avril 2015. Et par la suite, comme on peut voir un peu plus loin, c'est vraiment en septembre 2015 que, dans le fond, qui est arrivé le scandale. Donc, ça a descendu de plus de 50% et ça continue à remonter un peu. Donc, aussi, on a le 30 décembre 2016. Donc, dans le fond, 3 ans plus tard, l'action est devenue à 133,35 $. Donc, ça fait une différence d'environ de 71 $ dans l'action. Donc, l'action, elle a baissé. Donc, c'est bon pour les investisseurs parce qu'on sait tous que, dans le fond, le marché d'automobile augmente souvent. Et par contre, c'est moins bon pour ceux qui obtenaient déjà des actions. Donc, je vais passer la parole à Adam pour ce qui est du Trump effect.
Hello. So first, I'm going to talk about the newly inaugurated president now, Donald Trump. So in June 2015, Donald Trump announced his candidacy formally in New York. In July 2016, he officially won the Republican nomination after a grueling Republican process. And in November 2016, he beat former Secretary of State Hillary Clinton in a very hard election season, and he surprised many people. So first I want to show you the Dow Jones Industrial Average since January 1st, 2016, which is really when Donald Trump emerged as a clear frontrunner in the Republican race. He's been campaigning on a lot of pro-American and pro-business policies, which I will get to later, but that has really stimulated this bullish trend in the Dow Jones Industrial Average. So that's on January 1st, 2016. Then we can see on November 9th, the day after he was elected, initially there was a small bear market, but then quickly it shot up, and ever since the markets haven't looked back. It's been called the Trump effect, and the markets have really rallied since then, breaking a lot of averages. So as we can see on November 9th, they really took a pace upwards. December 31st, 2016, just on the dawn of the new year, the markets were already bullish, but they really took an upwards turn. And in the past few weeks, the markets have been extremely bullish, and they're getting very expensive, we believe. I want to talk about the Trump policy first. He has 4 main policies that relate to economic stimuluses. So first, he's a populist, and he's been pushing an America First agenda. So this means that he's really going to focus on American businesses, and he wants the American economy to prosper much before anything else. So it's really about focusing on American jobs and creating American wealth. Another thing is that Mr. Trump is definitely pro-business. So he's putting the interests of American businesses before many businesses, and he's geared towards the business environment in general, being a businessman himself. So that's definitely positive for the stock market. Mr. Trump is also focused on less regulation for businesses, which can sometimes hinder many things that they want to do. So that's expected to drive the markets upwards as well. And additionally, Mr. Trump wants to lower taxes, which will help everyone be able to increase their employees and also increase their bottom line. So we believe that the market is actually grossly overpriced and overinflated. And first I want to look at the S&P 500 since its inception. So you can see that there's really been 2 major corrections. One was the tech bubble of 2000, and one was the recession, the Great Recession in 2009. And since then, the market has really exploded, and it's been on a bullish trend upwards with really no major correction. There was a small one you can see in about 2015, kind of in 2011, but there was no major corrections as we can see here. They form mountains. So we really believe that we're not sure when, but there's going to be a correction, and that's something you want to look out for, Mr. Greedy, because you have a very large portfolio, and you don't need to create money quickly. So we want to be sure that you're being sustainable with your investments, and we want to make sure that your wealth isn't dissipated at any point. So it's important that we know when we're going to enter the market at the right point. Here I want to show you the market PE since 1880. So this is over a long time. We are currently at the 3rd highest point in market PE pretty much in history. I think it was equal in about 1895, but that's not modern history. So in the Great Recession of 2009, that was the highest point. The tech bubble of 2000 was the 2nd highest PE for the market, and right now we're at 25.76 as of yesterday. So That's the third highest point. So that's another indication that perhaps the market is very overpriced and is set for a correction in the near future. The PE ratio for the Dow Jones Industrial Average as of yesterday was 2111, and a year ago it was 1676. For the S&P 500 respectively, it was 2474 and 2093 a year ago. So over the past year, we've seen, much because of this Trump effect, we've seen the prices go up for stocks and they've been getting more expensive. But analysts estimate, for the estimate number there, it's over the next 12 months, that we'll actually see PEs go down for both. So that's another indication that maybe we're heading towards a correction. Furthermore, the Dow Jones just broke last week $20,000. It's the all-time high. The NASDAQ composite hit an all-time high of 5,000, first time since the tech bubble, which was the other all-time high on March 2nd, 2015. And the S&P 500 is currently at an all-time high, and it's gone very much upwards. So these are more indications that perhaps the market is overinflated and overpriced. So these are things we want to look out for, Mr. Greedy, because we don't want your wealth to be dissipated. We want to make sure that you enter the market at the right time and that your wealth, you're not going to see a decrease in your wealth. So we're going to give you three options ranked by risk. Option number 1 is going to be the lowest risk. Option number 2 is going to be medium risk. And option number 3 is, in my opinion, not extremely risky, but it's definitely the riskiest of these three options. So the first one is that we're going to invest in an S&P 500 index fund. So basically, as Liwei stated, it's really hard to beat the market in the long term. So because you are a young retiree, you have a lot of life ahead of you. And we want to make sure that you keep your wealth. Now, you have $50 million, and that's a lot of money. So you don't have $1 million. You don't need to go make a killing for next year. You can take your time because there's no rush. So mimicking the market over a period of 25 years, you're going to create a lot of wealth for yourself in a very sustainable manner. It doesn't matter if over the trend there might be some corrections, and even a recession, you're going to survive that. If you look at trends over recessions, the market still pulls ahead. Option number 2 is that we're going to create a custom risk-adjusted portfolio for you using different investment vehicles. So this will consist of stocks, bonds, and other investment vehicles that we choose with you according to your risk policies and what you're comfortable with. So that's going to be a lot of custom tailored things, and it could be medium risk, it could be whatever you want it to be. The third option is that we're going to do options investing. Now, options trading is very risky, but options investing from a value perspective actually really lowers the risk. So basically what we're looking at is not short-term options, but long-term. So about 2 years, which is a standard option timeline. So I want to go over the bull call spread for this. Basically, if you look at the graph here, these are the prices of the asset at expiration. And what you're doing by doing a bull call spread is you're limiting your loss and you're capping your gain. Capping your gain can be done also for a covered call, but the problem with the covered call is that you have your losses are bleeding. It can go on forever. So in this situation, you can know exactly how much you're willing to lose, and you can hedge against the market that way, but you know exactly how much you're willing to lose, so you're not taking on any additional risk. The best thing about options investing is that you're really going to amplify your gains. For example, if a stock goes up, let's say only 30%, you can make potentially 100% in that same time period. Now this is over 2 years, it's not quickly, and you're being bullish here. So if you think the price of Apple is going up $20, you can do a bull call spread and you can make a lot of money on that. So with that said, I'm going to pass it to my colleague, Marie-Claude.
Donc, en conclusion, aujourd'hui, nous avons revu beaucoup de points. Donc, dans le fond, nous avons vu le mandat. Par la suite, l'hypothèse de l'efficience de marché que Louis nous a expliqué. J'espère que ça vous a aidé à votre compréhension en finance. Par la suite, nous avons parlé du scandale Volkswagen, ses variations durant les années, donc dans le fond, entre le scandale et en ce moment. L'effet Donald Trump, que Adam nous a parlé, qui, dans le fond, qui nous disait que, étant donné qu'il est président, oui, ça a créé un crash dans le marché, mais ça continue à monter et ça n'arrête pas en ce moment. Et pour ce qui est des recommandations, on a vu dans le fond 3 options qui étaient à risque bas, à risque médium et à haut risque, selon la façon dont vous l'implémentez. Donc j'espère que cette présentation vous a aidé à prendre une décision et que vous allez choisir notre compagnie dans le fond pour vous aider plus tard avec vos finances. Merci beaucoup.
J'ai une question. I'm going to ask it in English, whichever of you wants to answer. You presented one of the option of investing with options. There's control of risk. You can control the upside and the downside. Seems like the perfect opportunity or perfect option. Is there any downside to that strategy, or any reason why we shouldn't go towards that one?
I mean, you're gonna lose potentially between the payoff and the lower end. That you might lose, but you're not gonna lose beyond the lower end. You're capped at your losses. So you're capped at your gains, but you're capped at your losses. So you know exactly what's gonna happen going into it. You're not gonna see anything crazy unexpected.
And was there a particular reason why you suggested that the strategy would be covering a 2-year period?
That's, I think, to my knowledge, the farthest you can go on an option.
Okay. Thank you.
Very good question. What among the bull, bear, chicken, and pig? What kind of investor would Mr. Greed be? And from what you studied from him.
I think, well, like I said, we think that there's going to be a market correction, so we really want to wait. We don't want to take his $50 million, which is a lot of money, and rush to invest it, right? So I think it's really about waiting and seeing. Really, we're bearish in the short term, but bullish in the long term. So what we're ideally waiting for is for the market to correct, and then enter the market at a correction, and then be bullish, which is where the option would come in handy.
Thank you. Merci.